Good afternoon. This is Ken Long from Tortoise Capital, and we're taking a look here on July 8th, 2014 at symbol XIV, and we're studying the patterns of the pullbacks that it's been making. It's been a good swing trade and a turbo trading candidate for us. But in the last 15 days or so, when it's reached the edge of the floodplain and had some pullbacks, we've been turning into swing traders and doing a little harvesting. Naturally, we like it when it has these long uninterrupted runs, but we have to adapt to the circumstances. So we're taking a look at the pullbacks and trying to get an appreciation of how our technical indicators are advising us on what to look for. So we're looking at daily charts on this one, and we've got the usual suspects on here. This is the 200-day moving average, is the red boundary, and the dark blue shaded area is the Bollinger Band 30 plus or minus 1. That's the river. The lighter shaded area is the Bollinger Band 2 plus or minus 2, and that's the floodplain. The dragon is this pink shaded region. That's a 10-period Bollinger Band plus or minus a half. The outer red lines are the 3-period Bollinger Bands. And the little dots are the parabolic stop and reverse with a parameters of 0.2 and 0.2, which is accelerated pretty quickly, much quicker than the default. This sine wave looking line is the slope of the regression line, the 30-period regression line. You can see that it peaked and has pulled back a little bit. So what we're looking at are the dates when the first parabolic stop and reverse shifts from support to a resistance indicator. So the first dot is highlighted in the blue circles. That's the first day that after a bullish move that there was enough selling pressure to give that. And so we're trying to see what happens in and around that little signal. So this one we're getting early warnings because we're approaching the edge of the floodplain and had a little doji, then some selling. We actually took profits in here at 47.25 in our swing trades, and then we've been playing some turbo intraday here, and then 2 days after selling, so the selling began, or the high point, if you will. So on the two red candles is when the parabolic stop and reverse goes from support to resistance. In previous ones, what we've had here was really almost immediate recovery. So there's only 3 or 4 little dots, but price never really failed and really continued to go. The recovery here was only after 3 dots. Had a nice hook when it found support at the edge of the river at the bottom of the dragon. That turns out to be a nice little alert, and so we should be stalking potential resumption here as well after really 2 days of selling and then a nice recovery off the day intraday lows. We should be thinking about entering this already when it's finding support at the edge of the river on a daily chart. This little pullback never even tripped the parabolic. This one did, and it was only 2 days, found support at the edge of the river, and off it went. This one was a little bit longer. This went 7 days, found support at the bottom of the river. This was at the end of about a 60-day sideways choppy kind of a market. So that's really 4, 5, 6, 7 days of selling pressure, where it went from 34-ish to about 29. So $5 on 34 is about a 15% pullback in XIV, which means that that was actually a pretty significant sell-off, and this was a really nice swing trade that found support after it dipped below the 200, found support at the 200, and off it went. This one, the parabolic lasted like 4 days, and we'll get a universal entry in here pretty quickly. And then, so if we're looking for universal entries to get back in this generally uptrending market, which we can say it's uptrending because everything is out of the river now, and the river is free and clear and pointing up. Here it's still sideways, quiet channel. So a materially different kind of a market. You can see everything pulling away from the 200. This actually looks pretty good for like an orderly pullback, finding support where it should find support around 45-ish. So now if we take a look at this on a 2-hour chart, the same kind of indicators, and then only now we're looking at 2 hours. This is the freestockcharts.com version of this. This one pulls back from edge of the floodplain back to the edge of the river, finds support. So what's interesting to note is that the interpretation of the indicators is the same regardless of the time frame. And what I want you to also notice is this kind of breathing effect. It gets wide, then pinches, gets wide, pinches, gets wide again, and that after periods of range compression, volatility compression, that the next expansion becomes very interesting. And so entries in here when the dragon leaves the river, and here after an RLCO at the edge of the river, nice entry. So what we've seen is some sharp little pullbacks here, and this one is consistent with that, coming from about 47.70 down to 45, so it's down almost $3 on 48. That's 1 out of 16, or about a 6% pullback. And so finding support in here at the while it's still in the river is good. These big circles here are just showing the move from the max inflection, if you will, of the 10-period regression line from the 270, and then when it collapses, it comes back to the 270. Then it gets to an extreme distance away again. Price collapses, comes back to the 270. Extreme move on the 10 is here. On the 10-period regression line, that's the blue, and comes back to the 270 and finds support. So finding support here, we would then expect it to come up and probably test 48 again. So this is now an interesting candidate, and I just want you to notice the strength of that 270 is kind of immune to these little very short-term fluctuations, which create swing and intraday opportunities for us, but which are really just noise to the long-term holders of this position, as reflected in the 270 regression line. And even when we look on the, we would see the same thing on the daily chart as well. So Ken Long from Tortoise Capital. Keep your risk measured and your powder dry.